Welcome back, everyone. My name is Fignoli Isme, and I am here with the IronFX research team presenting webinar number 6. Next to me are my colleagues Peter Youssef and Angelo Zitis, and we are here to discuss the Chinese economic riddle and, of course, China's overall economic picture. Please feel free to send your comments and questions to our live chat as the webinar proceeds. And our analyst will be more than happy to reply to any queries you may have. Now, without wasting any time any further, I'd like to start with Angelos. What has been the course and what is the current condition of the China's economic situation?
Mr. Fignola, thank you for the introduction. During the past 20-30 years, the Chinese economy has seen extraordinary growth. They've been able to move from poverty to, the medium class has been able to move from poverty to a medium to good income household income. Today, China is the second largest economy in the world. They have a growth rate of approximately 6% plus. At the moment, they have been said to be having some issues. It is said that they're having an economic slowdown. However, some numbers have come out and they indicate that the situation is under control.
Okay, fair enough. And that would move us to the financial indicators. Peter, what are the key financial indicators of the Chinese economy? And what is the message they are sending us at this time?
Well, the latest financial release would be the GDP growth rate for Q1, where Chinese economy, for the first time after 4 consecutive drops, has stabilized at 6.4% year on year.
Okay.
So we could say that the situation, as Angelos has mentioned, more or less is starting to stabilize. However, there are other indicators which support such a notion. And for example, the manufacturing PMI, which has come above the cutoff point of 50, indicating once again some increase in economic activity in the crucial manufacturing sector of China. Also, the trade balance surplus has started to increase again. It went up from $4 billion to around 33 billion US dollars. It's very indicative that the exports growth rate in February had a marked contraction of minus 20%. In March, it was back up into the positives, reaching 14% year on year. And also it would be interesting to note the industrial production growth rate, which has accelerated in March, reaching 8.5% year on year. The previous reading was of 5.3. It's a substantial acceleration which was achieved in the month. I'd have to say that overall the picture of the Chinese economy is that, okay, it's in its lows. However, the situation seems to be stabilizing somewhat. Mm-hmm. We could say that the Chinese National Bureau of Statistics this morning had made a comment relating to the releases, especially the GDP growth rate, where it mentioned that the consumption is the main driving force practically behind the improvement in the results. However, it also noted that there is considerable instability or uncertainty, which stems out practically of the global growth slowing down slowly. I would have to say that the Chinese may have bottomed out. And should the US-Sino negotiations bear fruit anytime soon, we could see them picking up pace again.
Okay. And if not?
If not, then we could see the Chinese economy slumping even further. Nevertheless, given the rate that it has been slowing down over the past 3 quarters, I wouldn't expect it to have such a steep deceleration.
Okay.
It's more of a slowdown, as Angelos has mentioned.
Right.
It's not something that they have entered a recession. They're slowing down.
Okay. Good figures. Now, let's talk about the Chinese government. Angelos, what initiative does the Chinese government take in order to fight this slowdown?
Yeah. Since 2008, China, they've been flooding the economy with debt. They've been trying to promote economic activity. They've been trying to create jobs. They've been trying to create businesses. This is what you do with debt. However, they reached a point where they were having fears on whether this debt was getting out of control. An economy with the size of China, with a growing debt, if you're not careful, it's very easily to get out of control, and it may need years before the economy gets back to where it first started. So throughout 2016 and 2017, they basically inflated industrial prices. They boosted industries that have taken too much debt. The Chinese government has also made some actions through stimulus. We're going to get into that a little bit later. But then they had also some zombie companies. These are companies that in the long term, they were making losses, they were creating more debt, and they shut these companies down completely. They removed them. And they also began a mixed ownership program, which allows private businesses, whether foreign or local, to take stake in state firms. They're allowed to have a percentage of state firms so they can boost their economy even further. And these are just some steps they've taken.
Okay. Now, would you say that these zombie companies, were they state-owned or state subsidized, or just private entities?
They were private. Entities? Yeah, they were not doing well. They were taking on... The government was basically making money off them because of taxes. Okay. But in the long term, all these losses and all the debt they were taking, they were hurting the economy. So they decided to completely shut them down and remove them.
Okay. All right. Okay. Fair enough. Now, Peter, what are the strongest and weakest economic sectors of China, do you think?
Well, definitely China has transformed into a manufacturing-oriented economy. Actually, an export manufacturing economy. As a second sector, which would be worth mentioning, would be the high-tech sector. Now, the high-tech sector has never been China's strong suit. But the Chinese government has been aiming towards that aim. And practically through the Made in China 2025 initiative, we expect that the high-tech sector will be getting a lot of boost. The non-manufacturing, actually the services sector, despite its considerable size, I would dare to place it on third row.
Okay.
And it should be noted that it has the greatest expansion in the past 14 months. It's very indicative of how growth affects that sector. Last but not least would be agriculture for China. Now, the Chinese have surpluses in some agricultural products, however, they still have deficits in others. For example, soybeans. Soybeans is a product which is used primarily for consumption in China, while at the same time they may also have, say, deficits in cotton, which is used in production.
Okay.
It should be noted, though, that the Chinese government wants to bolster reforms in the agriculture sector in order to actually boost that sector and the production it has. Okay,
very good, very good. What are the prospects of the Chinese economy?
Prospects. China's spectacular growth over the years has given them a lot of confidence and a lot of proactivity. They've introduced two strategic plans. In 2013, the One Belt, One Road strategic plan, and in 2014, the Asian Infrastructure Investment Bank. Now, they've been launched strategically to deal with domestic problems they have. They want to overcome these problems, but also they want to have influence in the region. Now, they've been basically moving to other countries. They've moved their businesses. They're investing in other countries. Over 150 countries that they've invested in Europe, in Asia. And they're also trying to control the dominance of other big powers. They want a market share. From there on, we move to the subject of energy. Energy is a huge chapter for China. They are the largest energy consumer on the planet. They are having a number of issues that leads China towards renewable energy. They have environmental issues, they have global warming issues, they have energy sustainability, and they are forced to move to renewable energy. They've been able to cover 25% approximately of the total energy they use with renewable energy, but that's still low as their energy, they consume more energy every year. So the demand for energy increases yearly.
Yeah.
Then I would like to say that China is also a huge market potential. A lot of investors, a lot of other countries, governments would like to do business with China because of the Chinese economy, because of the population, because of labor resources. They have an advantage in labor costs and all these things that China offers that in other countries is hard to get. So China is a huge target also for a lot of investors.
I see. Okay. How does the Chinese economy affect other economies?
Well, the Chinese economy affects the world economy only due to its size. However, I would like to single out three main categories.
Okay.
The first would be countries which have substantial exports, especially of raw materials, to China. Say, for example, Australia. Australia exports iron ore to China and has a number of other exports as well. So practically, the Australian economy gets a boost out of these exports towards China. The second category would be countries where the Chinese government or even Chinese private companies have substantial investments in. Either that's infrastructure, or it could be roads, or it could be harbors. These economies have also a close cooperation with China, so they are in one way or another linked to the Chinese economy. Last but not least, let's not forget countries which have substantial investments in China. For example, US companies which have substantial investments in China, either by building factories and actually having operations there. And that implies an indirect link between the Chinese economy and the economy back home.
Mm-hmm. Okay. All right. Moving on to the relationship between China and the commodities market. What are the main interests in these markets, commodities market?
Commodities market is very important for China. Of course, like Peter said, the first thing that we have to get into is agriculture. Now, for the last 60 years, they've been, well, from 1961 to 2012, they've been able to increase the value of their agriculture industry from $71 billion to $594 billion. That's a huge increase. They export rice and wheat. They can, with the way they're producing rice and wheat, they could, in some years, they will be able to cover the needs of globally.
Yes.
They will be able to send out a lot of this.
Yes.
Wheat and rice. Soybean is something that they import. Soybean has been used in the U.S. negotiations for the trade dispute. They would like to buy huge amounts of soybean from the U.S. They need soybean. It's something that they really consume. But another thing that is important to say for a lot of the commodities they use, vegetables, fruits, some meats and everything, they cover it by their own production.
Yes,
they don't need that.
Yes.
From there on, another important commodity for them is energy, is oil. They are the biggest oil importer in the world. They have refineries, they have a lot of investment going on because demand is forecasted to increase. for oil in China. So these are some commodities that
Yes.
the most significant
You
ones.
said something key before I move on to Peter. You said they are the biggest importer of oil. And I'm thinking back when the U.S. used to be the biggest importer of oil because of consumption, these big SUVs they drive. And that's before they started fracking. Then they started producing their own, mass produce their own oil. Actually, they're exporting now.
Yeah.
Okay. I just wanted to get that clear. So, okay, because, I like to talk about interesting stuff. So, Peter, I understand that the Chinese are also having a substantial environmental issue. I know firsthand because I travel a lot to China and have beautiful places and, the parks are nice. But sometimes, you're inside a hotel and room 2200 or something, you almost can touch the sky and you're looking down and you can barely see anything. Well, this doesn't happen every day, but sometimes it happens. What are the efforts that they are doing to quash this thing at this time?
Actually, you know what? It's been a while since we've seen smog-obscured landmarks of Beijing in the news.
Yes, that's correct.
There's a great United Nations report explaining what's been happening in Beijing, around Beijing. The Chinese were able to reduce practically sulfur dioxide in the city by around 70%,
yes,
and particles by 36%. They initially started with replacing coal-powered industries, with fitting them with pollution abatement systems, and later on replacing coal with cleaner forms of energy, say for example natural gas.
Okay.
They now have cleaner road fuels. They're scrapping old motors.
Okay.
So they're having substantial efforts towards that aim. And it's not only Beijing. There's a World Health Organization report which is monitoring 63 cities in China, and they have reported that there has been an average reduction of 30% of air pollution in all of those cities. So it's more of a nationwide issue. And the central government in Beijing has taken it on very sincerely to actually provide efforts. And they have a centralized planning about this issue. It would be indicated, for example, that they are planning to plant around Beijing in an area as wide as Ireland, more or less.
Okay.
I think, around this island, true.
Okay.
84,000 square kilometers. And they're going to plant it with trees. And they have detached around 60,000 soldiers from the troops in order to be able to actually plant those trees. And they plan to end it by the end of the year.
They are quite serious.
Yeah, it's like they're having a central planning on it, and they concentrate all the efforts on one aim.
Yeah. It's the amazing thing about China is the fact that whatever they put their mind up to, they just focus on that until they realize where they go.
In this case, they have no other choice.
Especially when it comes to the health of their population. Of course, they don't have choice. They have to do something sooner or later. Remember back in the industrial days of England and the United States, they had the same issue. They had to change quite quickly. So now, how are the trade talks with the U.S. progressing? I know they had some kind of sticky issues with the IP, with some other stuff, currency manipulation, and what is going on with this thing right now?
Well, what we're hearing from both sides is that the trade talks are progressing in a good manner. It's positive. They are saying that most of the deal has been agreed on. It's just some significant parts that remain to be seen. We're seeing the talks from Beijing to Washington. We believe that this change is because the one side wants to monitor the other side and make sure they're keeping their bonds and their promises towards this. If they are to agree,
Yes.
they will need to keep their promises.
Okay.
And I believe, especially the U.S. wants to monitor China, that
Right.
they will be in line with
Yes.
because they made a lot of requests.
Yes.
From a trader's perspective, we're seeing, because of this positive outcome they've been having on the talks, we're seeing a lot of traders moving money from safe haven assets to other industries, other instruments. Like we're seeing the Swiss franc oversold.
Yes.
We're seeing gold breaking below 1,300, aiming towards 1,250.
Okay.
And this could be due to the progress in the talks. So the talks are significantly, the course of the talks is significantly affecting trading activity, especially on safe haven assets.
Okay. Okay, very good. Just wanted to say hello to one of our viewers so while we're doing this.
Okay.
Now, how have the Chinese businesses been affected by the U.S. tariff? And how could those negotiations affect the way they have been doing business up until now? What do you think?
Well, it's a standoff. It's not only the tariffs, it's a general standoff between the US and China. And the most indicative incident practically would be the arrest of Huawei CFO, in Canada. And the possibility of her being extradited to the US to face charges, blah, 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 blah. However, the main effect has been a slowdown in sales and growth for Chinese businesses. I would dare to say that they tend to turn into a more aggressive marketing strategy, especially inland.
Yes.
And we could see such marketing strategies affecting also a more nationalistic view, a Chinese view by Chinese. In general, though, the big two lessons coming out, or the big two messages coming out of the negotiations, the US-China negotiations, seem to be that, one, the Americans are going to insist that the IP will be heavily protected, and the Chinese will not be able to practically bully out technology from other companies. But at the same time, the Chinese seem to be insisting that the Chinese government will be able to subsidize state-owned companies, and even companies which are considered as of strategic importance for the Chinese economy.
Okay.
So things are going to change. However, there are some things which are to remain for the time being, at least.
Speaking of a little bit about Huawei CFO, now it's something. ZTE had an issue with the United States government as well. They decided to just pay and get the heck out of there. They worked it out. That's what they did. They didn't have the same situation. I personally, my view, I think this whole thing about UAE is political rather than anything.
Definitely.
To be honest with you, that's my view anyway. I think that the fact that they go into a due process of law, and in Canada and United States, this is a good thing about democracy. They put you to a due process of the rule of law, which is good for her, because now we have a situation where she can actually use what Mr. Yellow Hair Trump said, that he could step in. If you're talking about rule of law, what stepping in is going to do? Do you understand? The law is the law.
Yeah.
So because of that, I think her lawyers are going to use that in order to reverse this motion of sending her to the United States. So I think the outcome might be somewhat favorable for her. I just wanted to add that in. Now, concerning the People's Bank of China, what has been the reaction to all of this, and how is the bank monetary policy of the country's currency reacting at this point?
People Bank of China what has made significant it's come as a surprise to us that they've been increasing their physical gold purchases. They've been buying a lot of gold. They've been adding for some years now. In 2018, they came second behind Russia in physical gold purchases. And in 2019, in March, they confirmed that their gold is still increasing. So in 2019, they could be the number one. Backing your bank with gold could be a counter of risk, could be a counter of uncertainty, could be to face a difficult economic circumstance, or something unforeseen, or it could just be value. You want to create, you want to stand by value, which is very good. From there on, if we can move to a chart we prepared for the currency, the renminbi. This is the USD Chinese renminbi. We've basically broken down the chart to two areas. The first blue line is when Trump's tariff came into effect. All right, this is on the 23rd of March 2018.
Okay.
From there on, we see the USD CNH taking an upward movement, a steep upward movement, and stabilizing. All right. And then the second blue line is when we start with 2019. Okay. And we see all these negotiations taking a positive outcome, and people are more optimistic about the trade wars.
Okay.
So we see the currency basically correcting a little bit lower. At the moment, these are the levels we've noted. Also, I would like to note that we see the last candle, which is today's reaction to the news that came out in the Asian session today, which Peter already confirmed, was the GDP reading released today at 6.4%. It was forecasted to drop to 6.3%, but it remained on hold. So we see basically the Chinese currency strengthening.
Okay. That's
good. Now, I would also like to note that they have been suspicious of the Chinese manipulating their currency. All right, analysts are saying basically that they've seen a lack of sensitivity of the Chinese currency to other market reactions. And we're also aware that the U.S. side has publicly said that they do not want the Chinese to mess with their currency because it hurts the U.S. economy because of the interaction they have. So if they affect the U.S. negatively, it could be said that they're also helping their side.
Of course.
Their trade balance is improved, and the U.S. trade deficit is increasing. So that's an issue with the currency that we could see both sides trying to work out. You should find, if they don't find, because the US doesn't like what the Chinese is doing, and the Chinese is basically, this is the way they operate. It's not going to be easy to change both sides.
Yes.
So I believe that they will have to find a middle solution, something to compromise.
Yes.
In order to reach an agreement.
Yes.
That's for the currency. And China's monetary policy, well, they've given their banks freedom, basically, to reduce money reserve requirements, basically the money they need in the bank. They've reduced these requirements, and they're allowing more debt to go out. They're trying to create jobs, create business, buildings. They're trying to create infrastructure.
Okay.
This is one of the monetary policy tools they've been using.
And this outflow of money, is that locally or globally?
Both.
Okay. You suggested gold. and you suggested also debt.
Yeah.
Could they be balancing the act per se, having so much debt and buying so much gold just in case something happened?
As we said at the beginning, they're trying to watch their debt. Even though they provide debt, they're at the same time trying to watch it.
Okay.
But if you don't allow your banks to lend, it's like cutting back on growth. It's
Yes.
cutting back on jobs.
Yeah, stimulant. Yes.
So it's I believe it should be used controlled.
Okay. Fair enough. What FX instruments are available to trade the Chinese economy, and how are they behaving with the latest development?
Well, the most obvious FX instrument would be the Australian dollar against the US dollar, because the Australian dollar is considered as a close proxy to the Chinese yuan,
Okay.
because it has a huge exposure. Australian economy has a huge exposure to China. Now, we've seen a chart here. Here it is. It's the Aussie against the US dollar. It's very indicative, say, for example, that the drop they had on the 4th of January, that reverse spike in the middle of the chart, which shows us practically it was the day when Apple had announced that it will have reduced revenue due to the Chinese slowing down.
Okay.
That caused instantly the Australian dollar to drop heavily against the US dollar. On the contrary, as in the past 10 days, we've been getting good news about a possible agreement in the US-Sino negotiations. We can see that the Australian dollar has been strengthening against the USD in 10 consecutive days. However, we should bear in mind that the Australian dollar is also influenced by local economics.
Okay.
Say, for example, we could see the Australian dollar weakening tomorrow should the employment data not be favorable.
Okay.
It's going to be the Australian data.
Okay.
On second base, it would be interesting to note that also the New Zealand dollar, which has a similar exposure to the Chinese economy, has also similar reactions. Whenever we see positive Chinese news or news about the possibility of the Chinese and the US getting near a deal increasing,
Okay.
then we see also the Kiwi strengthening against other currencies, as does the Aussie.
Very nice. As we proceed, I'd like to remind the viewers that we are taking questions on our chat line if they have any questions about trading. So they should do so before the session has ended. As the Chinese would say, howder. So now let's move on to the Chinese stock market. Do you have Chinese companies or indices in mind that could be of interest to our viewers?
Of course. Here in IronFX, we offer, first of all, Xiaomi Corporation. It's a China-based investment holding company. They are engaged in research, development, and sale of smartphones. Mm-hmm. They are also involved in smart televisions, laptops, artificial intelligence, ecosystem products. They employ approximately 15,000 to 16,000 employees. They have people in China, in Malaysia, Singapore, Philippines, South Africa. If you've seen their stock, we acknowledge that they've had their stock was basically dropping in late 2018, and since 2019 started, it's moved a little bit higher. It's stabilized and could be aiming for higher grounds. Yet it's an upcomer as a company and has huge potential.
Okay.
From there on, we have a great Chinese company, the Alibaba Group.
Okay.
They have online and mobile commerce through offering of products, services, technology. They enable companies to evolve by this. They transform companies to markets, and they also a lot of people go with Alibaba because of Jack Ma. He is the co-founder of the company. He is the executive of the company. He is a very influential person. He's very inspiring, the things that he's done. He's starting the company from zero. If you do some research on Jack Ma, he's on the level of Bill Gates, of Mark Zuckerberg, of Elon Musk, of Jeff Bezos. He's that type of personality. He's a monster in the good way. So a lot of people go with Alibaba for the long term. I would also like to let our viewers know that today Alibaba is releasing their earning releases and could have significant market reaction upon release. Yeah.
Okay. I have two things to mention to you. One thing is that we have a viewer who's asking if we're going to do any more Brexit webinars. If you don't answer that yet. Okay. The second thing is I wanted to mention something. Alibaba is a very good company. I remember back in 2015, early 2015, something like this, I was doing a seminar in Shanghai, and I had like 100 people there, and I think they just started the IPO. It was like $38 or something like this, and it was sliding down and down, and I told them, I was like, buy it and hold on to it.
Yeah.
Well, guess what? Alibaba is at $180 now. Can you imagine if I followed my own advice?
It definitely is a company to stay with.
Yes.
The way they're operating, and if you take a look also in their investors, the people that are with them are also very strong. Very strong investors they have. So there's like this huge belief that this company will continue to grow globally.
Let's talk about these questions our viewer had about the Brexit. Are we going to be doing any more webinars about Brexit? Should we be doing, because this thing's still ongoing? Okay, I don't think Theresa May's off the hook.
No,
she's still following around with that shoe repair guy around.
We've already done 2 videos on Brexit, and if the news is out,
you think there's a demand for it?
Yeah.
Look, there are underground developments which are evolving right now.
Yes.
But however, in general, right now it's a rather quiet season for Brexit.
Okay.
Things may heat up as we approach May 22nd.
Okay.
And we see how developments will be evolving around that time.
Okay. Well, let's go leave it. I like a little challenge every now and then. Let's go a little bit further. Any viewers out there who are watching us and would like us to do another webinar on Brexit, please contact your account manager, make some suggestion, do some voting or something like this. And if it's favorable, we have enough numbers, and we will be looking into doing something like this. What do you think?
No,
better.
If there's a request.
I think people should watch the pound.
Yes.
It's a very tricky instrument.
I think that's why they're asking the question.
Yeah. It's too risky.
Yeah, right now.
It's a bit risky because of the sudden change they have, and how the news is basically understood by the market.
Right.
Because you may understand that the market is moving in one direction, but it's the opposite.
Right,
it's basically going from good news to bad news, or it could be still the indecision.
Right.
And that's what we're seeing on the pound at the moment. It's a big indecision.
Yeah. Let me ask you this. Very interesting, because we have to, help these people and educate them and so on. Let's just say, if you were a trader out there right now, as risky as it is, but you still want to trade the pound, what would be the best way to do it?
In my opinion, this is what I've tried.
Yes.
This is not what people should try. People should get their own trades out.
Right.
What me and Peter have done, we've basically gone to day trading. We pick a price, open price, and we pick a closing price.
Okay.
We don't want to be in there too long.
Right. Very short flicks.
Yeah.
Okay.
We want to get to the price we want
Mhm.
and then close it.
And move out.
We don't
Okay.
have to make millions in one
Right.
day.
Yeah.
Right.
We can move to a price and be happy that I managed to get there in one day.
Right.
That's enough.
Yeah.
I've done everything I can do.
I believe that it brings you back to the webinar we had about planning your trade, planning your
Yeah.
day.
Planning your day
It's
and
the same
planning your
thing.
trade. Yes.
Yeah. Okay. So.
But look, okay, there was a little chatter there about Brexit, but I would dare to say that if someone wants actually to trade the Chinese economics,
Yes.
okay, there are a number of instruments out there.
Okay.
We mentioned already the Australian dollar, we mentioned Xiaomi, Angelos has mentioned it, China 50 is
Yeah.
also a good idea.
Yeah. The NZ as well. You mentioned, no? New Zealand.
New Zealand dollar, yeah, the Kiwi, right?
Yeah.
The Kiwi. We could also mention that the Chinese also affect oil prices as they are big importers of oil.
Right.
But oil is being heavily affected by other factors as well. So one should get the fundamentals of China behind him,
Mm-hmm.
have a firm grip on them, understand that practically whenever we have positive news about the Chinese economics, the Australians tend to get some support, or the Kiwi tends to get some support. Say, for example, today, when the Chinese GDP got out, it wasn't only the GDP actually, it was also the industrial growth rate, it was the retail sales,
Yes.
it was a number of indicators which were all favorable for China. The Aussie against the US dollar strengthened around 40 pips upon announcement.
Wow.
The
That's
New
exciting.
Zealand dollar had a similar reaction, lower than, but similar. It also went up, I think only around 25, 26 pips.
Okay.
But it's indicative how the Chinese news actually affect other currencies or other FX
And
instruments.
also adding to what Peter said, this movement, he said, with 25 pips up or down, creates a lot of opportunities.
Yeah.
It gives a chance for you to jump in, or if you're confident that you know what's going to happen, you can jump in the day before.
So they can find opportunities in or out.
Yeah. Also, one should be advised that Chinese economics create not only a moment's reaction, but a whole momentum.
Okay.
So practically, the releases we had today may have a longer effect on the Australian dollar. Okay, actually the Australian dollar is going to have the employment data tomorrow, so there could be some reversal there. But in general, they create have a longer term effect, maybe 2 or 3 days or a week.
Okay. Very good, guys. Very good. Good stuff. I think we covered everything else we could cover. Once again, thank you, Peter, and thank you, Angela. As you know, IronFX will continue to provide a number of live webinars and seminars on various topics in order to boost your trading potential. For more information and trading ideas, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, and circle us on Google. This is Fignoli Ismay from IronFX, wishing you solid trading, and as the Chinese would say, Sai Jin.